Hello and welcome to Industry Leader Insights. I'm Andrew Montesi, publisher of HECM World. Now, over the past few months, I've had the privilege of stepping into this role and spending many hours speaking with reverse mortgage execs, lenders, top producers, coaches, educators, referral partners, and industry influencers from across the country. Now, I'm not a reverse mortgage originator, and I didn't grow up in this industry or this country, as you can tell from my accent. But sometimes, as an outsider coming in, it's easier to see the patterns and what it all means. And after many conversations, interviews, articles, podcasts, and strategy sessions, there are a handful of themes that keep coming up over and over again. Now, these aren't the only issues facing the industry, but they are some of the biggest opportunities and challenges that leaders have been talking to me about right now. And it all leads to one question: are we ready for what's coming? Because I believe we're approaching a tipping point. The opportunity ahead for reverse mortgages may be bigger than anything this industry has seen before, but that doesn't necessarily mean that we are ready for it. Now, let's start with the challenges.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Now, before we even talk about reverse mortgages, we need to talk about housing. The United States has a housing affordability and availability problem, and it's a big one. According to Freddie Mac, the country remains millions of homes short of what is needed to meet demand, with estimates of the housing shortage ranging between 3 and 4 million homes. At the same time, home ownership has become increasingly concentrated among older Americans. Baby boomers now own roughly 38% of the owner-occupied homes in the United States, despite representing only around 20% of the population. Now, most of us know this. A relatively small segment of the population controls an enormous share of America's housing stock. As affordability pressures continue to build, younger generations are becoming increasingly frustrated about their inability to access home ownership. And naturally, attention is turning towards older homeowners. We're already seeing policymakers exploring ways to encourage seniors to move. Recently, members of Congress proposed legislation that would increase capital gains tax exemptions for older homeowners who sell their long-held residencies. The goal is clear: unlock inventory and get more homes back into the market. Now, here's where it becomes interesting for our industry, because reverse mortgages support aging in place. They help older Americans stay in their homes longer. And at some point, these two narratives, they collide. And on one side, you've got these housing advocates arguing that seniors should move to free up housing stock. And on the other, you'll have millions of older Americans who want to remain in their homes and communities that they love. And I don't think that this becomes a major issue tomorrow, but I do think that it's a conversation that the industry needs to start preparing for. Because if we don't start to shape the narrative around aging in place, somebody else will. Now, the second challenge surprised me, and frankly, it's one that came up far more often than I expected. The reverse mortgage industry's messaging problem starts from within the industry itself. I've heard many leaders tell me that many loan officers who often market themselves as reverse mortgage experts often don't fully understand the product, at least not at the level that they should. And now that's not a criticism, it's an opportunity. Because if we are struggling internally with education and confidence, how can we expect the broader mortgage industry to understand reverse mortgages? Many forward mortgage loan officers don't understand them. Many realtors don't understand it. Many financial planners don't get it. And it's the same for attorneys as well. And if all of those professionals are confused, what chances do borrowers and their families have? This is one of the biggest challenges facing the industry, because reverse mortgages don't just compete against other products, they compete against decades of misunderstanding. They compete against old headlines. They compete against outdated assumptions. They compete against fear. And education is the answer, not just consumer education. We need industry education, professional education, partner education, and family education. If the next decade truly becomes the era of housing wealth, then reverse mortgage professionals need to become the best educators in housing finance. The third challenge is closely related. It's financial advisors. Almost every industry leader that I speak with agrees that advisors represent one of the most important referral opportunities available today. Yet many loan officers struggle to gain traction. In our next Food for Thought, you are going to hear from Christina Harms, who believes that many originators are actually intimidated by financial advisors. They assume that advisors know more. They assume advisors are maybe even judging them differently, or they just assume that advisors are harder to approach. But Christina's argument is that most advisors are looking for exactly what every other referral partner wants, and that's competence, trust, reliability, responsiveness, and someone who helps their clients achieve better outcomes. Here's the part that should get everyone's attention. I recently chatted to one of the nation's top reverse mortgage producers. Roughly half of his business comes from financial advisors. So we know it can be done. The opportunity exists. The challenge is whether we are prepared to build the relationships and earn the trust required to access it. Because financial advisors are becoming increasingly important in retirement planning conversations. And housing wealth is becoming increasingly important in those retirement planning conversations. Those two worlds are inevitably moving closer together. Despite those challenges, I'm actually incredibly optimistic about where this industry is headed. In fact, I think we may be standing on the edge of what could become a golden era for reverse mortgages. Why? Because all of the macro trends are lining up. Older Americans hold the majority of housing wealth. Home values continue rising over time. Inflation continues putting pressure on retirement budgets. Healthcare costs are going up. Longevity continues increasing. Social Security is unlikely to provide the retirement security that many households need. And these aren't short-term trends. They're long-term structural realities, and they all point in the same direction. Housing wealth is becoming more important, not less. And one statistic shared with me recently really stood out. Now, there are roughly 65 to 70 million baby boomers in America today. Industry estimates suggest that millions of older homeowners could potentially qualify and benefit from a reverse mortgage. Yet annual HECM volume remains around 25 to 30,000 loans. Think about that for a moment. We are talking about an industry serving only a tiny fraction of the people who could potentially benefit from its products. The total addressable opportunity is enormous. The question isn't whether demand will grow, the question is whether we'll be ready for when it does. Another theme that I've noticed in the industry's ongoing shift is messaging. Historically, reverse mortgages were often positioned as a solution for people in financial distress. A product of last resort, as I've been told. And that's changing. The leaders I speak with increasingly view home equity as a retirement asset, and that's the message. It's not an emergency fund, it's not a last resort, it's an asset, just like investments, just like pensions, just like savings. The challenge is that much of the public hasn't really caught up yet. Many consumers still think of reverse mortgages through the lens of the decades-old stereotypes. Changing that perception isn't the responsibility of one lender, one loan officer, or one trade association, or for the people to just get it. It's an industry-wide responsibility. It's on us. And I think we need greater alignment around the core messages that move the conversation forward. Because the more fragmented our messaging becomes, the harder it is for the public perception to change at scale. Another major opportunity is HECM for purchase. It's a topic that we've been discussing regularly here on HECM World, and for good reason. The demographics make sense, the affordability challenges make sense, the aging in place trend, it certainly makes sense. But I think we need to move beyond simply talking about the opportunity. We need more professionals successfully executing it. And recently on Industry Leader Insights, we had Joe Conrad on, who shared his strategy that he's been using for many years to build a highly successful HECM for purchase business. The lesson wasn't that the opportunity exists. We already know that. The lesson was that success requires intentionality. It requires relationships, education, process, and consistency. The blueprint exists. Now it's about execution. We can't talk about the future without, of course, talking about artificial intelligence. Every single industry is wrestling with it, and reverse mortgages are no exception. The good news is that AI isn't replacing relationships. If anything, it's making relationships even more valuable. AI can help us create content faster, build educational resources, automate workflows, improve our marketing, and handle those repetitive admin tasks. But here's my concern. Too many professionals are seeing AI as a replacement for human interaction. And I think it's the opposite. The goal should be to use technology to free us up more time for conversations, more time for clients, more time with their families, more time with referral partners, more time face to face. Because at the end of the day, reverse mortgages remains a relationship business, and it always will. The professionals who win won't be the ones who spend the most time behind a laptop. They'll be the ones who use tech to spend more time in front of people. Which brings me back to the question that I started with. Are we ready for the boom? Because I genuinely believe that we are approaching a period where housing wealth becomes one of the most important retirement planning conversations in America. The demographic trends are there, the economic conditions are there, the equity is there, the need is there. But right now, I'm not sure that we are fully prepared. If we can't clearly communicate the value of reverse mortgages, if we can't educate our own industry, if we can't build stronger relationships with advisors and referral partners, if we can't align around a clearer message, then we may only scratch the surface of the opportunities sitting in front of us. We need to get educated, we need to get aligned, we need to strengthen our systems, we need to strengthen our processes, and we need to be ready. Because the time is now, and here at HECM World, that's exactly the conversation that we want to facilitate. We want to help build the reverse mortgage community, we want to connect leaders, share ideas, challenge assumptions, and move the industry forward together. So I'd love to hear your thoughts. What are the biggest challenges and opportunities that you're seeing? Leave a comment below and send me an email at andrew@reversefocus.com. I'm Andrew Montesi. Thanks for joining me for this edition of Industry Leader Insights. I'll see you next time.